So we're back once again here. David and Nick, we're going to talk about different types of investments today. I'm drinking something new for me. I have Founders Charisse, which has just come back out. They're doing a big push now to help support the fair and equal Michigan in their fight to pass the first ever LGBTQ rights law in Michigan. So this is available only in Michigan right now. It's quite tasty.
I say I'm jealous that you have it. I switched from beer. I went to the Founders Glass, but I have Malibu and cranberry. So Malibu rum, if you're out there and you want to sponsor, I'll always take that. So this is my drink of choice here. So back from vacation, it was fun. Got the T-shirt just to prove I was there. So thanks everybody for watching last week. We had a good time. Real excited about this week's episode, investing and how to do it and what it is. So what investing actually is.
So we kind of broke it up into different areas here. And as we've talked before, Nick is into real estate, and I think we start there. So I'm a big fan of passive investments. And, you know, Nick will tell you that his real estate holdings are passive, but it's way more active than I would want. So kind of my favorite tool for passive investing for real estate is Fundrise. I love Fundrise. I have an account. My daughter has an account. I just dump money into it. What they do is they put your money into different types of projects so that you're diversified and you're not losing any grand scheme of money. And then, you know, when a project pays back, they'll send you an email saying, hey, this project paid back. And I think my returns in a year is I made a little over $100. So not too bad because I only threw 500 in to start. So
yeah,
if you're looking for a nice tool, I think Fundrise is a great tool to passively invest in real estate.
Yep. So you can also look at Roofstock. Roofstock.com is you know, they find what you know, houses that are rented. You know, they call them turnkey. These things are houses that are ready to be rented or rented already. You know what the income is. You can just invest into it. Hire property managers outside of those types of things. And so you can just fund it and be very passive off of that aspect. You know, we do say that, you know, mine's getting towards passive. You know, my goal someday is to hand it off to other people so I don't touch a thing. Now I do the work so I can get to that point. You know, another thing, because we were talking about Prosper and Fundrise, David,
Fundrise,
yeah. So Fundrise for real estate, but you can, you know, if you have a substantial amount of money, a self-directed IRA, even you can actually lend money. It's called lending hard money. So quick examples, round numbers. Somebody found a house that, you know, is worth, let's call it 200,000, but they can buy it for 100,000. You can fund that money at, let's call it 10%. You know, so you'll make, you know, $10,000 on this type of a deal. You know, usually paid back within, let's call it 6 months. You know, just because these people need this money in 2 weeks, type of a thing. You'd have to be accredited usually to do that. But you know, so if you want to be very passive, throw your money out there. You can have other lenders do that with your money. You know, they'll vet all the deals and do that. So I have funded a couple of deals now myself. You know, and I enjoy it, but you know, I look for that long-term money compared to that quick money. So that's real estate's always where I'm gonna try to shoot for. So.
Yeah, so that at least gives a couple of good real estate options out there. You know, you want to give yourself options. I throw money into a lot of different areas because I want options. And Nick kind of same thing. He likes to have options, so he throws money here and there. At least if you can stay diversified, that gives you, a nice guarantee on your money. You're not going to lose too much in any one area.
Yeah.
So
the hope is if one fails, the other ones pull it up, kind of a thing. So yeah, I see that we see that far too often, right? Like some people are only investing in their 401k, let's call it, and then just they get disappointed when the economy right now or whatever takes, oh, I just lost half of my investment. Well, if you would have had money other places, you wouldn't have lost as much. You would have lost that much here, but not your total net worth. So
right. Yeah, and one of the other things Nick and I looked into probably 2-3 years ago was Prosper, which is a peer-to-peer lending company, which they do it, and the other popular one is Lending Club, also does kind of the same thing. And I've thrown some money into Prosper. You get decent returns, somewhere between 5 and 30%, depending on how risky you want your investment to be. And then we've touched on it a little bit before. I do a lot of research when I'm looking into a Prosper loan to try and figure out, okay, where is this person going to be at paying it back? So I know one of my loans right now, very poor credit. They make about $100,000 a year. Only took out about $10,000 in a loan, but they're late almost every month. So I make extra money on late fees, which is great. But there's always that question of, what if this person can't pay it back? Now, I make sure that I don't lend out a lot of money, so I'm not losing a ton of money here. I might lose $20, but I might, end up making $40 off of that investment because I put in very little, and I keep it well spread out in how much I'm loaning to any certain loan.
Sure. I'm gonna say, and just to kind of dig a little deeper in, I enjoy what it is. So there's some people that go in there, because they want to consolidate credit cards, right? There's some people that go in there because they want to get a better rate on student loans. There's some people who are, looking to lower their car insurance or car interest rate. So these loans are for kind of just everything. And it gives you great detail. It gives you, right, the history of these people, what their credit is, what they're generally looking to fund, whether they do it or not, with the money that's, but so it gives you a really good breakdown in detail. So you can, and then it grades it, right? Like A+ through I want to say it's E or F,
Yep.
right? A scale that just, the lower the grade, the bigger the chance that person's not going to supposedly pay it back. But, again, the bigger your return, right? I mean, 30% is pretty good return if that person pays. So, it depends on what kind of a gambler you are. So,
well, I'm pretty well diversified there. I can say I put some money towards A funds. I put some money towards the absolute worst credit on their site, and I've never had anybody default yet. Knock on wood. So, I've been pretty lucky in that because I do my research. One thing you have to know when you're investing is it's not something that you can just sit there and throw like darts at. You really need to do your research and know what you're putting your money into. Now, if you want to take a $5 gamble, that's great. I looked at MLB odds, and I really think I should take $10 and put it on the Tigers this year because their odds to win the title are 15,000 to 1.
Yep.
And $10, I'm gonna make a lot of money if they win the whole thing.
I'm hoping that Mets fans are watching, but I'm not a Mets fan. I hate the Yankees, but good news for the Mets is this will be the first ever season they will not have over a 60-game loss. So good job, you've done it. No, and we don't find gambling as an investment in any way. Yes, there's people out there that are poker stars and they do it for a living. Yes, there's people who say they play slots or table games for a living. That is not an investment. That is a gamble and a risk. Sure, you can educate yourself as much as possible, just like anything, right? But um, you would hope that the difference is you're you look at the amount of people that walk into a casino that hit the jackpot versus the amount of people that invest and win money, right? So the odds are you don't walk into a casino winning money. So
Yeah, and like with everything, it's a gamble, but you're taking a better educated guess with your investments than you ever will betting on anything, whether it be a slot machine, a horse, or anything else.
yeah. Say I love the horses. I do love the horses.
And I love playing fantasy sports, but it's not made me rich yet.
Yeah. Say
100-200 bucks a year maybe I'll get, but that's about the extent. I get much better returns on my investments.
yeah.
It's not quite as fun, but
Let's say, and those are some of the new websites that are out there for types of investing. We want to touch base on stocks. I want to dig a little deeper. Some people don't know what stocks necessarily are, how they work. You hear people talk about it, and then I know myself. Like I hear people talk about, oh, hey, you gotta buy this stock, and then you hear other people saying never buy one specific stock, and then you hear, everybody's got an opinion, and we know what opinions are, right? I mean, so I'll be honest. I have day traded. It is the most anxiety I have ever gotten in my life. I did very, very well at it. I'm not going to lie about that. Um, but I also didn't have education enough. I'll be 100% honest. I put in $5,000. I at one point was up to $21,000 in profit because I had done a bunch of research, found a stock that was doing well, and then the next day, or during that night type of a thing, the part of it was bought out for $25 a share. So like that's what they valued it at. As I bought it for I want to say $10, and like it shot. Like this thing was skyrocketing, and it went up to like 140 a share. But before the opening bell, there was a buy for 25, and so it just started losing and losing and losing, and all that money started coming down. So um, when it opened, I finally got to sell. I think I walked away like honestly even for my kind of money, but I was up like $5,000. So I doubled my money in the 2 months that I was doing it. Sorry. So I don't want to call it day trading. Legal day trading is to buy one specific stock and sell it, uh, buy and sell 3 times within a 7-day period. So what I would do would be buy it, get to a comfort point, sell it, buy a stock type, get to a comfort point and sell it. And then I have to wait until that next day could come because otherwise I have to have $25,000 of liquid money sitting in the market or sitting in the account in order to qualify as a legal day trader. And I wasn't comfortable with that amount of money, so I had to take my chances. You can buy stocks on so many different sites. I don't suggest people do day trading unless you do a bunch of research. That's really what I did. Everybody, I'm back to work. I can't say I'm back in logistics because I got a demotion at my company. But right, so the stock that I bought was in logistics. It had come across my TV as like something bad happened, and I was like, hey, this is a company that has years and years and years of history on it. So that's why I bought it really, really low, and it jumped for me. But so to tell you guys, I guess what a stock is, you are a company, a corporation, anything is selling you part of ownership of the company for a certain value. They have a certain amount of things called shares. You buy a share at a value. So, if let's say Apple, right? Everybody knows about Apple. I don't know the price. I want to say it's $300 or $900. Let's call it $300 to be fun. You buy one share of it valued at $300. They're going to take that money and they're going to invest into the next iPhone 15. They're going to invest into the next thing. They're going to build a bigger site. They're going to come up with new technology. So they're taking your money, putting it to use, and then you're hoping that the next thing that comes out, the iPhone, 15 or whatever it is, they're hoping that this is a big success, and your $300 then looks like $315, let's call it. You're not going to get astronomical returns all the time, but through history, you're hoping that these companies are growing and doing bigger things. So, you can, back in the day, people used to do off the newspaper. Now everything's done, done online. But that's what it is. You're investing in a company specifically, and they will never sell over 51. They will never sell over 49% of their company's worth. They have to maintain a certain amount, and that's regulated. So that way, nobody could ever control it without buying the company itself specifically. So
Apple's sitting at $364 a share.
Ooh, I was real close. So
I know when we had the downturn at the beginning of the pandemic, many stocks took a nosedive. And not only for Caitlin, but for myself, I dumped money into Disney, Nike, and beyond. Disney, because of its history, probably the number one entertainment company in the world. They have Marvel, Star Wars, the parks. They're not going anywhere. And they got down to like $68 a share from a high of, I want to say, about 146. So I bought several shares because I knew it was going to go up, and it's hovering around $100 right now. So we've made good money on that. Kind of the same with Nike. They got down to about 60, but they're the number one sports apparel company in the world, and they're hovering right around $100. Beyond is one of those newer stocks that they're pushing fake meat. Now, my wife's a vegetarian. She loves Beyond's products. So I threw money into that. That's probably my highest gain at this point because they're hovering around $150 a share. I bought them at, I don't know, 50 or 60. So again, if you're going to buy stocks, a lot of people have a lot of different ideas about how to do it smart. Buy things you believe in, buy things you trust, buy things you use. Okay. I bought Beyond because we buy that. So I'm a customer. I bought Disney because, we like Disney products. I see every Marvel movie. I see every Star Wars movie. I got a bunch of Star Wars stuff here. I got a bunch of Marvel stuff here. It's something I use. Shoe-wise, I can't say I'm a Nike buyer anymore. When I was a teenager, I had every pair of Jordans. I don't have that anymore. But I know the value of Nike because, again, they're the number one sports apparel company in the world. They're that for a reason. They've been that since the early 80s.
Yeah.
Great track record. That's something you look for.
Yeah, I say, and we're naming some stocks. Don't take our word. Again, you have to do your own research. We are not licensed stock sellers. We're just giving you input of things that we do because we want this stuff to be about what we do, what we know, and what we want to educate you guys with. So there's websites or apps and things like that you can buy stocks. Personally, I use TD Ameritrade. I know there's Robinhood, right? And if you sign up with Robinhood, you get a couple free stocks just for signing up. I think, David, you can put a link below so that way people can get a referral for that.
Yep.
If you're looking to do the single stock things, right, these are ways you can do that. Any other things that you know of for like single stock or purchases type thing, David?
The other one we use is Ally Invest, because for Caitlin's savings account, I use Ally online. Since the pandemic hit, they have zero fees to trade. So I've been trading like crazy the last 3 months, buying stocks for her because I want her to build that portfolio, and because I'm her dad, she just lets me do what I want. So for the most part, she's been, making a good amount of money in her stocks.
Yeah.
So those are the ones I really like. There are some other ones that I use. We've talked about Stash before. We've talked about Acorns, which you're not buying a full stock on some of these. You can with Stash, but with Acorns you can't. You're basically putting it into a market type segment and buying pieces of different ETFs, exchange traded funds. That way, you're still diversified and they're only throwing a little bit here or there in, and you're not necessarily losing money.
Let's say, and then, you can, now I want to move into, we talk about Betterment a lot on this podcast or video cast, whatever you want to call it. I love Betterment, right? So index funds is a thing, right? So it's a group of stocks kind of put together. They come up with their own fund, their own group that they've done all the research type of a thing. And then, I give my money and I buy into that and get amazing gains. I actually haven't checked it in a while. But, so there's Wealthfront, Betterment, Vanguard. Vanguard, we talk about Betterment all the time, but Vanguard, right, historically is literally almost always in the top 3 for returns. They are a fantastic fund, fantastic company doing things. I honestly, like, I chose Betterment just because it was easy to do for me, something I wanted to try new. I'm new and hip to try the small guy thing. And they let me do it for a small amount. So, they take their group of what they, people who are way smarter than I'd say David and I, who have time to research, and then they say, hey, invest, and then they take their amount of money, their commission for selling, right? Their percentage for doing all that work, and it's a small little fee, but right, you hope that they're going to bring you good money. I mean, again, the amount of money that I think last year, Vanguard was what, an 18 to 19% return, and Betterment was a 17, 18. It was just huge. It was, so if I'm giving away, like, I think I gave away 1% or something of my Betterment money. So yeah, okay, thanks. You made me, 18%. I'm pretty happy with giving you that kind of money as a big thank you. So.
Well, I'm a huge fan of Vanguard because I'll buy Vanguard stocks and ETFs. They always, like Nick said, they always perform well. So if you're sinking your money into something, you want to find something that has a rich history, and Vanguard really seems to outperform a lot of other ETFs. So that's always someplace I'll throw money to. When I was looking for investments for Caitlin, Betterment was one of the first ones I looked into. Wealthfront, I opened a Roth IRA for her at Wealthfront. And the returns, on both are okay at best right now because, the market's kind of up and down. But when I sit there and I look at everything, I talked earlier, I really like passive investments. I love them because I don't have to do a lot. When I'm looking at the market, that to me is not a passive investment. That's something I'm always watching because I need to do my due diligence there to make sure that whatever we're invested in has a good opportunity to return money. Now, we've, like everybody, I've made some investments that haven't panned out to this point. There's some stocks I bought that ended up consolidating and, lost money in them, and that's normal. Again, that's why you diversify. So because I am diversified, I can take that loss, whether it's $70, $100 or whether it's $5 or $6, it's still a loss. It sucks. But looking long term, because I'm watching it all the time, I know that, overall I'm making money. And that's the most important thing. If you go find a return on investment calculator, punch in your numbers, and it will tell you exactly how you're doing. And as long as you're above 6-7%, you're doing well enough to continue to grow that money. Ultimately, you want to be over 10, but that's a hard number to hit.
Well, and statistics show us that the stock market on a 10-year period will return 10%, right? I mean, it's through history. It's not something we're making up. It's a thing. So, your hope is every 10 years, right, you're going to come close to doubling your money with the amount that you keep throwing in. So, it's a fantastic tool to generate wealth. To say David and I, right, we enjoy passive, right? Because we've talked about it a couple times. Passive to us is, we have an end number in our life that we need to live off of, and every dollar off of that number, right, of passive money that we don't have to work for anymore, like, our time becomes so much more valuable. And so, I know we're going to talk about it probably later in this episode or another episode, but I want to talk about the 25 times rule, and 4% withdrawal, and it's one of my favorite things to think about in life. So, I want to move on to something. I'll be honest, I'm not very familiar with it. I don't use it. Cryptocurrency, crypto to me, it scares me. It's right. I think I've seen somebody with a coin before, so I guess they have like an actual thing that you can hold. But like this new money that's kind of created just isn't my forte. It's not something. But I know you can buy into it, just like you can buy into, I want to say, gold and silver, right? Like, those are other things. So you can buy into a metal, or you can buy into this crypto, and right, the value of it goes up or down. We've seen crypto be, I mean, it was zero at one point, so and then it came around. So it's been ridiculously high. People made millions. They mined for it. I have no clue anything about it. David, do you know anything about mining?
Not really. I know that when we look at crypto, it's extremely risky. It will jump greater degrees than what you're going to jump in the stock market, which means, you could hit the lottery and make a lot of money in a very short amount of time, or you could lose all of your money in a very, very short amount of time. So it's a thing. People like it. I don't recommend it because I don't know enough about it. And to me, kind of like Nick, I'm tangible. This pen, I can touch it. I can use it. I don't know what cryptocurrency is. To me, it's fake money. I'm not interested in fake money. I want money I can touch.
Yeah. So if anybody out there wants to give us a comment of a lesson of crypto and why you think it's amazing, why you think it's horrible, why you know it's amazing, why you know it's horrible, give us your comments. It's something honestly that we are interested in learning about, and just because we are lacking the knowledge of it. I did talk about gold and silver. That's another way of investing. Again, a tangible thing. You've seen some of the late night TV shows. Buy this gold coin rare, buy the silver nickels or whatever these are, right? So, you can buy into coins, or you can buy into the actual gold or silver itself. I have a friend who buys silver every week. Right now I think, don't quote me, but last I knew silver was right around 16, 17 bucks. He takes a $20 bill, goes and buys an actual silver 1 ounce round. He just builds up a big stockpile, and then, over time, at one time silver got up to 30 something bucks, and he decided he cashed out, and then he restarted again not too long ago. But so you can actually get a tangible. So if you want to do, you can do right by the ounce, by the 2 ounces, 5 ounces. I mean, you could do a 1 pound bar, of an actual metal. And so, right, gold used to be the backing of money, right? The actual dollar bill. It is no longer that anymore. They got away from that, but so there's still value in the metal. Honestly, gold, right? A lot of people don't know gold is used in every cell phone. There's a small, it's a great metal. It's very soft and it produces fantastic. So, gold is usually a very high value. But one thing I like about silver is if you want to have something fun and you can tangibly hold something, you can get it for very inexpensive. Hold it, and I find that your returns are never going to be astronomical, but there's always a chance, and there's people out there who enjoy that.
Well, and what Nick's talking about now is commodity trading, and commodities are really good, especially if you're in a down economy. So we went through this in the Great Recession of 2008, 2009, that if you wanted money and it was in gold or silver or grain, or if you go back to the movie Trading Places, frozen concentrated orange juice, you were making money. Those things were valuable. If you're a Parks and Rec fan, which I'm a huge Parks and Rec fan, you'll relate to the fact that Ron Swanson doesn't know how much money he has, but he knows how many pounds of money he has, because his money's all in gold.
Yes.
Buried all around Pawnee. So, it's an instrument. You're probably not going to get rich off of commodities. I know that, my mother had a financial advisor for many years, and when President Obama was getting elected, they decided that the world was ending and they wanted to put her Roth IRA into commodities. So she bought a bunch of grain, and I want to say her and my aunt bought about $15,000 worth of grain, which right now is about worth $5,000, and they can't sell it. So every time she talks to me about money, I always bring up grain. Because when they called me, I said, nah, I've always made more money with Democratic presidents than I have Republican presidents, so I'm going to leave my money right where it is. And if I needed to cash out my IRAs right now, I know that, the $3,000 I opened them with is worth 13. So.
Let's see, and that's, I've done some fun commodity trading. There's a couple apps out there to let you practice. I think, and okay, so honestly, everybody, this is a real. Be very careful with commodities. Okay, commodities, they will lend you money up front. Okay, you don't have to necessarily put in your money, and I don't want anybody to run out there and do this, but you are legally obligated and bonded to pay this money back, but they will front you like $25,000, and you just go trade these commodities, and if you lose it, then you pay it. If you commodity trading is scary. It's a thing that you will have to pay. But so be careful. They will open you a line of credit because they want people to trade commodities like crazy. But if you wanna mess around with it, buy some grain, buy some hay. Just go to Google or Apple Play Store, find commodity trading game, and it's a great time. There's something fun to me about trading grain or hay. I actually have to have a bale of hay in my backyard to buy or sell it, so that's kind of fun.
So talking about going back to stocks for a minute here, Nick.
Yep.
One of the things I started doing more recently is I've been buying options instead of, just buying stocks. So if you buy on an option, say I want one share of this company valued at $10, and they're trading every minute the exchange is open, the price is changing on a stock. So it's at $10 right now, and in 2 minutes it's at 10.05, and 15 minutes later it's at 9.35. So to put an option in, you decide, I want to buy one share of this stock, but I'm only going to buy it at $8.95. Mm-hmm. When it hits that price, if it hits that price, you now own the stock at that price. Mm-hmm. So you can put in exactly what you want. You won't necessarily get that stock because you're setting the price that you're willing to pay.
Yep.
And if it never hits that in that day, then your money's just still yours. You haven't bought anything. But looking at some of the things recently, I've been doing a lot more options than I have just straight buying and selling, because I know what I want to pay, and it may not necessarily be what it's at. Because if you put in an offer, it's going to buy that when the market opens, or the soonest it can once you place that order, if the market is already open.
Yeah, and just to touch base, I guess. So, right, we were talking about Disney around $68, right? We could say, oh man, I would pay $100 for that. So I just put in $100. Let's say it's at 68 right now. It instantly buys it for the lowest price that it is at that exact moment. So right, you would pay the $68 and keep the rest of the $100 bill that you have. But with options, right? So let's say again with this, it's Disney. It's valued at 68. You see it and you're like, man, you know what? I would really buy it at $60 because that's a great value, right? 60% of its normal value or whatever. If it drops, if it stays at 68, you're never going to buy that stock, right? If it goes to $60.01, you don't buy that stock, right? Like, even though part of you is like, oh, I would have paid for that. Let's say it hits to 60.01 and then jumps up. You missed out on all that. Like, you don't get to buy it. So what you put in, if it hits that mark, that's where it buys it. That's what you get it at. So, it's a really fun. I like it because it gives you the option to say what you want it for and what you're actually comfortable buying it for. So, me, I usually look at things and I'm like, okay, hey, this is what I want. If I have a busy day, this is what I want to buy it for. It'll send me an update right when it bought it. So, I'll buy 2 shares or something at $15 a piece or whatever, and but it's sitting at 18. Market opens, it drops, it's $3. I'm like, okay, cool. I've got this the rest of the day to hope to come back. So, it's I too have used the options feature. I like it. So now you have the option to sell. You can name a price. The issue with selling is, like, let's say you put it, at $100. If it never reaches that, right? You're like, oh, I wanted my money. You don't really actually get that. So, you have to make sure it hits those points. So make sure you think of your numbers and what you're happy with. But let's say you buy it at 68. You say, hey, I'm happy at 75. Once it reaches 75, it instantly sells, and you lose out on the other $25 when it gets to 100. So, right, like, these things instantly happen. These are things that say, this is where I personally am happy. You don't get the chance to say, oh, I would love more. No, this is you have committed to say, I am happy to buy this. So.
Yeah, and that's one thing you really have to look at with investments is, what are you okay with? What am I okay losing here? What am I okay gaining here? Because we all know that you're going to make bad investments. You're going to lose money. It's hedging those bets. I have a good friend that they made about $1 million by trading, and then within a month, that $1 million was gone, and they ended up down like $30,000, $40,000, and they figured out real quick they don't want to do this anymore because it's just too risky for them. So you really have to take into effect. My wife, for example, will go to the casino. She takes $10. She plays through the $10. She's done because that's what she's comfortable losing. If she hits a jackpot and let's say wins $60, she's going to cash that $60 out. Now she may still play that original $10, but she knows she's going home with money.
Yeah. We'll say, and one thing I want to touch base again on stock. Sorry, we keep going back. I love Facebook. Just keeps me in touch with everybody. But there's always the issue is once you Google stocks or once you do whatever, right? Your Facebook comes out with you know um, somebody that's always a professional at this stuff. And when I was day trading, it popped up, and there's one guy who sent out his buying list, and so I was like, oh, I'm gonna give it a shot and look at it. And then I get into Facebook argument with this guy, and I'm like, no, like this thing is past its prime, and you can clearly tell this. Oh well, that's just an example of one. And I'm like, okay, well you're giving horrible information. Like your Facebook says this is this is your watch list. What are you watching? You're watching failure happen. Good for you. Like you've just now given everybody this opinion that and I'll bash him. I hope I don't get sued, but I think his name is Timothy Sykes, right? Like he's got all these videos. He's on so many different things, and then it's just his opinion, and then all of a sudden he's like, oh well, that's weeks ago, and I'm like, so you don't have time to update everybody on your stuff, but somehow you want people to follow you when you're not willing to do the work ahead of time. Like, don't call yourself a professional doing it. Don't say like you're putting so many people's life at stake with your knowledge, right? Like we're here giving you guys our opinions and telling you what we buy. If we lose money, it's on us. Like, don't go buy what we buy if you're not comfortable with it. But yeah, I get so frustrated with these gurus and these people that say, oh, we're here to help you. And man, you know what? If you're making so much money by yourself, like what do you need? You're not there to give me charity work. You're not there to, it's frustrating for me so much to see this happen. So do your research.
And here's the deal. I mean, Nick and I, we started doing this because we got sick of just doing it to each other. Okay. That sounded wrong. But Nick and I, we have these conversations in each other's houses all the time. It would be the same conversation that you guys have watched if you've ever watched any of the episodes we've done. And we just talked amongst ourselves about why this is good, why that's good, why we like this, why we don't like that. And we didn't necessarily do anything, excuse me, for any props or any kind of money. And even with this, I mean, we joke around saying, hey, Founders sponsor us, because, I'm freaking Founders or, yep. Miller Lite or Bud Light or whoever it may be. But we don't make a dime on this. We do this because it's enjoyable for us to talk about money, and we want to help people. At the end of the day, Nick and I have both been coaches. You don't get into coaching because it's going to make you rich, because it's not. Okay. For every Bill Belichick, there's 800 coaches that make negative dollars every year. So really what we're looking for is to just impart knowledge on people, and hopefully they can live a better life, because that's what we're all trying to do here. So nothing we tell you is an expert's opinion, just what works for us.
Yeah. And then I think we have like one more thing to talk about, David. Bonds. Do you want to touch on bonds for everybody real quick?
Yeah, I'll touch on bonds real quick. Bonds are great when the market's down. If the market's down like it was during the recession, that's making money. If the market's up, it's not making any money. So it's a good investment tool to kind of hedge your bets. I know with Betterment, you can decide how much you want to be invested in stocks versus bonds. Caitlin sits at 90% stocks and 10% bonds, because that way it's hedging the bet of, if the market's really good, she's making money. And if the market's really bad, then, she's at least got that 10% doing something.
Yeah. I think mine is at 90-10 as well on Betterment. We've talked about, 401ks, right, what they do. Honestly, we just want to give you guys options of things that you can put your money, and small amounts as well, right? So, I mean, not everybody has $1 million just to go out and throw in, but we've talked about it. If you take $20 out of a paycheck and you throw it towards something, right? Like, if you can come up with $50 and you do 25 in one fund and 25 in a different, right? You are officially making yourself grow a portfolio. Like, and again, the chances are one of the three or one of the two, whatever, is going to be going to carry the other one. That's your hope. So nobody invests intending to lose money. That we all have an end goal and an end want in life, so we want to try to get there and help everybody reach it. So let's say if anybody has any questions, we welcome them for sure. I want to thank everybody for all the likes, all the subscribing, and all the sharing. I want to ask again this week, like always, like, subscribe, share. It means a lot to us. I think we have a couple more episodes lined up. We want to touch base on what people are interested in right now. So if you guys have any ideas.
Nick brought up a good point earlier. If there's somebody out there that's an expert on cryptocurrency, let us know. We'll do this with you, and you can impart your knowledge on people and teach us, because we want to know. We don't know everything that's out there. So, we talked about return on investment a little earlier, and I wanted to hit this before we finish this. So, just looking at Caitlin's, because I watch her stuff more closely than I watch anything else. When I look at her Wealthfront IRA, her return on investment is 7%. Her Betterment's 4.75%. Her Betterment IRA is actually above 13. The return on investment for Robinhood, because she has some stocks in there, only about $500, but it's 85%. Her Fundrise return is over 10.5, and her Ally stocks are over 7, almost 8%. So if we got somebody joining, Nick. If you're investing, then you're looking for these kind of returns. Ummer's coming in. How are you, Ummer?
Hey, how's it going?
Not too bad. We haven't seen you in a couple of weeks here. You've been busy with the kids.
Oh yeah, and we had family visiting, so.
Yes.
So, Ummer, just a quick rundown. We've talked about real estate investing, Fundrise, and roof stock. For more passive income. We've talked about Prosper and Lending Club. Ways to invest in people and get them out of debt. Index funds, Vanguard, Wealthfront, Betterment. Put your money there. We've talked a lot about stocks. This has been very fun for us. What day trading is, my version of day trading, reaching just the threshold. We've talked about bonds, ETFs, cryptocurrency, which, do you know anything about cryptocurrency, I guess, why we have a new guest on?
Nope, not much at least.
So we're still looking for that one person that knows. David and I don't know much about it. And then we've talked about some commodities, gold, silver, grains and things like that. So we always welcome every input, and even if it's not mine, I really love to debate things. So we're always willing to hear people and what their opinion is. Again, we talk about real estate. Not everybody shares the same opinion I do. I am a different breed when it comes to real estate, when I'm finding from even my friends. So there's a million ways to invest, and not one single way is the correct way. Right? I think they say with stocks, the more you have, the better your chances that one of them is going to kind of go up.
So Ummer, now that you're on, what do you like investment wise? Tell us.
I invest in ETFs almost exclusively. All of my money is in ETFs. All broad total stock market index funds.
ETFs are exchange traded funds, which I absolutely love. Why almost exclusively, Ummer?
Because I don't want to sit there and take care of my investments. I check it maybe once a month. We've been at a point in time where for the past, 12 years, it's just gone up nonstop. So it's been a great time to invest in them. It's fun to watch my money grow, but I know that there will be a point in time when, close to half of that could pretty much just go away. But I have faith in the system that it'll just come back up.
Sure.
Well, and the great thing is, I'm obviously the oldest one here, but still, knocking on 43 here in a couple days. Relatively young. Fuck you. Relatively young still, so we know there's going to be a downturn, and that's okay. It's something you're going to weather that storm, and if you sit there and you look at your investment and you say, okay, well, I put in 10,000 and it's up to 50,000. Even if I lose half, I'm still way ahead.
Yep.
Well, that's I try to give the example all the time with my Betterment and with my 401k. Two totally different things, but so my Betterment, right? We say I put $25 a week into it for my daughter. Right? It grew. I have $6,000 in it, let's say, and honestly, at one point I had $1,300 in profit or something. That crash happened for the COVID thing. And I literally lost all my profit. It took me seconds to lose it, but my mind didn't say, "Oh, sell it real quick because I'm losing money." My mind said, "Man, I made $1,300 in the 4 years I've had this thing open. You know what? I don't need it for another 14 years. So think of the money that I can get on that money." So, I go into my 401k, and I put in 1%, and my company puts in 1%. Let's say I only do the match. Well, let's say I do match, right? And 100% of 3% or something like that. So technically, 50% of that money that's in there is free money that I've been given. So if I lose half of my money, it wasn't my money in the first place. It becomes my money because I've earned it, and it is my money. But again, like, I don't really care if I lose half of somebody else's money at that point. I mean, they're going to give it to me, and I think that's a great thing. But I have, again, and me being 31, supposedly I have until 65 till I retire, or whatever these people, 67 nowadays. So I have years until I can touch that thing. That thing is going to rebound. So let's say we go into, let's say I turn 60, right? And I have 5 years and I get scared. Let's say we've gone the next 20 years of my life or 30 years of my life, and we've had only ups. You know what? I'm going to probably get a little more conservative. I'm going to move that money around to be very, I know a down's going to come. So at that point I can play it, but I don't need to at this young of an age. And I mean, you guys are, David, you say you're old, which you are. I want you to know that, but you still have so many years, right? So there's no need to rush and be worried about it, because we know that things are going to come back. If you're investing money that you need tomorrow, you shouldn't be investing that money. We want to be clear on that. Yes, it sounds, to us it sounds cool, and other people it makes you a nerd, but right, it sounds great to invest and to make this passive money that we talk about, but there's not many people in this world that are going to put $20 and get excited to get 10 cents back on. Right, the three of us are like, oh man, I made 10 cents doing nothing. So, it's what gets us joy. So,
well, I think one of the things you have to look at too, especially with us, is I don't plan on working into my 60s. I might work into my 60s, but that doesn't necessarily mean I'm working. If that makes sense to anybody out there, because people ask me all the time with my wife's business, if that really takes off, am I quitting my job? Well, Ummer works with me. He knows I work from home. I'm pretty much left to my own devices. They trust what I do. I get my job done. I'm really good at what I do. Nobody really pushes me around or anything. It's a really good job. I enjoy it. What do I need to quit it for? To me, that's living the dream. I wake up, I walk 2 feet, and I'm at work. It's fantastic. And I like what I'm doing, so I don't have to sit there and go, man, I hate working every day. So I may work there into my 60s, but for me, that's not really work. It's more enjoyment than anything. And they pay me very fairly. I'm happy to do it. I know with Nick, his long-term goal is, he wants to retire in 10, 15 years because he wants to do what he wants to do, which, is basically pay somebody to manage his properties, collect the checks, and travel the world, which I do not blame him for one bit. I know Ummer would really love to just go be a financial advisor because he loves money and he doesn't really necessarily want to continue to do the normal day-to-day work that he does. And,
Yeah.
The end goal for all of us is going to be a little different, but it's all the same. If I'm working into my 60s, it's because I'm enjoying what I'm doing.
Yeah, so it's because you're making that choice, right? And that's the biggest thing is the ability to make choices in life. And I think that's one of the biggest things. I can't go into too much details of what's going on in my life right now, but it's, I'm at that point where I have to make the decision. Do I do financially what I have to as a husband, father, or do I take a risk and change things because I've made some financial decisions in my life to allow me to make these choices? Right? Do I give up a day job? Do I quit and enjoy my life? Right? Like, so I don't have to be controlled by somebody. I mean, I have that. I'm on that verge of where do we go? So, honestly, it's the ability to make the choices to do what you want when you want to. Extremely.
Yeah, I'd say that financial freedom is what we're all striving for, and what most people in general strive for. They just don't see that it's possible before they reach full retirement age. Whereas, we're here to tell them, yes, it is.
So, and I think a lot of people, like a lot of people think it's so hard to believe that $20 builds into 105 weeks, right? They just don't see that you can get a $100 bill at the 5-week mark. It's so long for them. Now you take, and I say that being so serious. Like if you tell somebody, hey, give me $20 for 5 weeks in a row and I will make it a $100 bill, people don't understand that. Now, if you do that for weeks upon weeks, then it'll turn into a massive amount of money that you will literally just go, holy crap, right? Like, I mean, we people buy houses because that's what they're told to do. And, the hope is that your house stays of value or goes up in value. I think there's people out there that just buy it because they're told to, and they don't look at it as an investment type of a thing. Excuse me. I think everybody needs to look at what they want in life, set your real goals, figure out who you are and what you want to be, and then go achieve them,
Well, I think that's a great point, Nick. Not only figure out what your goals are, write them down. If you write it down, you're holding yourself accountable.
Yeah, definitely.
Right.
I always got paper around. I mean, last week's episode.
Yep. And that's, I write my goals. I write my goals a lot, and I try to focus on them. When I was in the basement, I had goals on boards all the time. I mean, I have to go back and even do that right now in my life. Like, and they're always going to change, but I know the chances of me hitting them are a heck of a lot better when I write them down. So we say it all the time, and we really mean it,
So I think we pretty much hit what we wanted to hit in this episode. As usual, Nick, Ummer, and I are going to talk after we're done here. But as Nick always tells you, like, subscribe, share. If Founders wants to sponsor us, thank you for the delicious beer tonight, Founders. You could sponsor us. Or any other company out there that would like to sponsor us, by all means, we would love that. Other than that, we'll figure out what next week's going to be, and we'll impart some more knowledge. So thanks for joining us again.
Take care.